Watch News Weekly today is going to be a market update. We're 6 months into the year. It's only fair to give you, the viewers, where we feel the market is, throw some numbers around. Overall, we've been saying this for a few months, the market has stabilized, but don't take our word for it. Let's look at the three main indexes that are out there, right? And this is WatchCharts, shows a market down 1.9%, which tells me it's steady. SubDial index shows down 2.2%, and ChronoPulse index shows down 1.35. Now, this is coming from Bloomberg. SubDial index is one that's been around pretty much the longest, right? And then ChronoPulse is a Chrono 24 product.
I'd also like to point out that in the last 6 months, obviously, the first 2 quarters of the year are historically always the slowest, given summer. And given tax season is the first quarter of the year, so numbers are always down there. So for what they're showing, 1.35 and 2.2%, I think that's a great number.
Okay, well let's run through some charts. Here's your WatchCharts.com index, and again, what they're doing is they're taking sales data, they're averaging it out across X amount of different models, and they're saying, okay, well the average price was this across all of these models, et cetera, which in my mind, and I'm sure I know exactly what you're going to say when we see like some of the watches that are in those indexes, you're going to say, well, that's just not the S&P 500, right? This is what you told me earlier when we started discussing this offline. Let's go to the next chart. This one shows, again, this is Bloomberg SubDial Watch Index. They're showing an average price of $33,000. These numbers may not mean much, but once you put the models behind them and realize how they're deriving these numbers, it starts to make a little bit more sense. And the last one, obviously, this is Chrono 24s. They're at a $1,400 rate over the last 6 months.
It's like dollar per share. It's like a dollar. Is this like a share price of a watch index?
That's basically what it is. But looking at the graph, we're seeing that the market indeed has stabilized. You have some ups, you have some downs, you have some dips. But if you look at the beginning towards the end, the line seems to connect fairly straight. I know these watch indices aren't exact. But for example, some of the models is your 116-500, you have Patek 5711, 15500 ST Audemars, Vacheron 4500 overseas, all your winners, if you will. There's a ton more watches in there, but I believe what they're doing is taking their top sellers and they're averaging it out across, which again tells me this is not a real finger on the pulse of the market. Now, you are head of procurement here, you are also head of sales here, so you really have your finger on the pulse. And again, the data that we can provide is not just based on our sales data, or at least our Adrian can provide, because Adrian is out there also buying. Buying is probably a better indication as to where the watch prices are. If you're able to week in and week out take a single watch, be it a Daytona or be it overseas, and if week in and week out you're buying that watch cheaper and cheaper and cheaper and cheaper, that tells you the market is going down. If that price is steady, plus minus 10, 20%, I'm going to say, depending on condition and all those things, then you know that, hey, this is the stable market, because clients get better deals. Sometimes somebody needs money and they need to sell something, right? Let's say in case of a Chrono 24, you may have a private individual that's in dire need of cash, and you'll put something $2,000 on the market because he needs that money, or sell it to a guy like us cheaper. We may in turn, like I said, do a favor to somebody and sell the watch cheaper. There may be trades involved. I may sell a watch. How often do we sell a watch with minimal profit because we know we're going to be profitable on the trade end of things, right? It's all about how you put it. And to try to do this and make it like the S&P index, what did you say earlier about stocks?
I think, look, when you have, so the reason that I'm not the biggest fan of the indexes, although whatever they're showing seems to be pretty consistent with what I'm seeing, is that, if you take, let's say, Apple stock, right? There's no Apple stock and Apple CPO stock, certified pre-owned stock.
There's no Apple stock missing a link.
You can have so I saw, like, for example, 5711 in there, and let's just assume it was a blue dial. You can have a 30% margin difference between something, between a 5711 that's used with no box papers versus a double sealed one. There's just too much of a spread.
Well, let's put a dollar amount behind it. How much is a naked old 5711?
Let's use from 70,000 to 120,000.
It's a big
That's
swing.
a huge swing.
That's a humongous swing.
So that can really throw these numbers off. But again, I do like what I'm seeing in terms of very minimal volatility, very minimal downturn in the market. The only thing I can say for almost certainty was actually a very interesting concept. When things were going up and the watch market was on the way up, the spread between pre-owned and new was much smaller than it is now. In other words, pre-owned prices have a bigger spread from their counterpart new pieces, if that makes sense. So, for example, if a Panda at the peak of the market was 55,000, Panda Daytona. A used one was 50,000. Now a brand new one, let's say, is 32,000, and a pre-owned one is 26,000. So that spread,
as it should be.
Yeah, so that spread has gotten bigger with pre-owned.
I will add one more thing into the mix related to what you just said. People always ask me, what is my watch worth?
Yeah.
That is the number one question I get asked a million times a day. You look at my Instagram DMs, how many of those do you get a day, right? You say, I feel like I'm a consultant sometimes. Well, and this is about as clear as I can put it, and I've said this a multitude of times to a multitude of clients and friends. It's how do you identify the part of worth? Here I am a watch dealer. Somebody brings me, and I'm not talking about Daytonas and 5711s, right? I'm talking about the spread between the buy and the sell. Yeah. So somebody brings me a independent. In fact, I was offered an independent today. An independent, I'm not gonna mention names or models, just for shits and giggles. I'm gonna say it's a watch that retails for $200,000. You'd be hard pressed to get it. They're all sold out, but from a small independent company, the 𝗴𝗿𝗲𝗍𝗍. And the gentleman goes to me, the 𝗴𝗿𝗲𝗍𝗍.
Gotta make a t-shirt, by the way.
we gotta do that, right? So, and the gentleman goes to me, he's like, listen, I need to know what this is worth. I see there's one on Chrono24 for a little over retail, $220,000, $30,000, right? What's this watch worth? I said, I think today I'd be probably willing to pay around $100 for it, so you're better off consigning the watch. He goes, well, why? It's online for $225. I said, isn't it worth that? I said, it is. I said, but what a lot of people tend to miss, and this is where all these indexes go into the toilet, what is a guy like me, or you rather, is willing to pay for that watch in the secondary? Because when we buy that watch, we'll look at what? Return on investment over time, right? So if we know that watch can take on an average to sell 6 months, and we actually have that data because we've had them, we've sold them, does that mean that watch is worth $100,000? No. Well, it's still worth the $200,000.
I think this index is primarily catered towards where the watch ends up on the end client's risk, because due to the fact that dealers need to pay a certain price to make a certain margin, that index is going to be thrown off. Not to mention, a lot of dealers have different appetites in terms of what they're willing to pay. Somebody's okay to pay 5% under what they sell to a retail client for. Some people want to make 20%.
Some people want to make 50%.
Yes,
but we actually use logic, rhyme, and reason to do this. We use actual data. We use past purchase history. We look at the market. We know what this past sales prices were, where we say, okay, if it takes me 6 months to sell this watch on an average, as I've done in the last 10 years, I know I am going to need to make X margin for it to make sense, because money costs money. We can calculate all that. Not a whole lot of dealers do that or have the capacity to do so, right? So for me, again, the answer to the question what the watch is worth, I believe it's what the end user is willing to pay for it, or what the end user, what the end user pays for it on average. So for them taking those top sales and taking the averages of them, if you take the consideration out of pre-owned versus new, et cetera, then yes, I will agree with that index somewhat. But the problem is I know Bloomberg and the other one are coming from multiple sources. What those sources of data are, I don't know. Something like a Chrono24 is a little closer than being the largest platform online selling pre-owned and brand new watches. Makes me feel a little warm and fuzzy inside to say, hey, listen, they actually sold these watches. They looked at the sales prices, they averaged them out, and this is what it came out to. So I will take the Chrono24 index
I'm just going to
before I
say
take a
one more
Bloomberg.
time, I'm very happy with the numbers that they're providing. Whether they're accurate or not, they seem pretty accurate to me. But if I was going to make an estimate on where, I would say over the past 6 months, overall, if you take the blue chip stuff, brand new. Specifically, I'm going to use brand new because there's too many variables within pre-owned. If you take stuff like 4500 𝗙𝗏𝗍𝗍, if you take, let's say, brand new Pandas, what Nautilus today is brand new, because 5711 certainly isn't new anymore. But anyway, over the past 6 months, if you would have told me that it's down between 5 to 7%, I would say, wow, that's pretty accurate. Whatever they're showing here seems a lot more.
Well, they're showing that spike in the last 30 days, right? So
these indexes are, I think, a little bit more bullish on where I've seen the market in 6 months. And again, that's not necessarily a testament to the market. It could just be a timing thing. You might see things pick up in the next quarter, and this chart's going to be off the charts, right? So
this is what I said. We get back to the regular market, the regular scheduled program as we have in the last year, where the market has stabilized. This is what the regular watch market looks like. Literally this, and slowly it goes up. Something crazy happens. It spikes, goes to the roof, comes back down, and stabilizes again. But overall, if I did this index going back to 2004, right? Then you're going to see all those spikes, but you're going to see this no matter what. And again, that has to do with inflation. It has to do with, price of cheese today is not the price of cheese 20 years ago, and that's just the bottom line. I would ask you the following. Wouldn't it also be fair to judge the watch market or the index, if you will, not just by grabbing top 50, 100, or whatever models that they grab, but wouldn't it be fair to grab everything? Take the slower selling independents, take the smaller market watches, take everything that we have in stock. Because if what we did is we took all the watches that we sell here to include the Roman buys, not just the Daytonas, then you would see a more clearer picture. Now, I looked at the numbers yesterday, me and you looked at the numbers yesterday. For the year, we're down 14% for the year in terms of revenue. Mm-hmm. Our margins didn't change. Right? So does that mean the market is down, or the market, meaning that we're still making the same margin? In fact, I think our margins are slightly up, maybe around 1%, right? Today, right? Next month they may look differently. But right now I'm also saying to myself, well, actually that's not so bad because I know how the years go. Your first quarter is usually slow, then you get into the tax season, it gets slower. Summer months also get slower. Your June, July,
absolutely.
We don't start picking things up till like mid through August. Mid-August is when we pick things up, and then we usually kill it September, October, November, all the way through December, and that averages out the year.
Last quarter is definitely gonna, if you always compare last quarter around holiday season to quarter two, I think is always historically. We also have
blows
out of the water.
We also have election, right? So which is another sort of phenom that only happens every 4 years.
Yeah, I don't know if this election is getting people's emotions or happiness up. Or
last night's debate was something else. Well, we're not here to talk about the debate last night, but I would call it a show. Like, just leave it at that. With that said,
and both their handicaps are pretty good at golf, if I may say, which I call.
So they say.
6 handicaps, pretty good.
Look, bottom line is this. I think that the reason we wanted to bring in these watch charts is because we always talk about the market. We tell you it's stable, it's up, it's down, whatever it might be. We can get into specifics on models. We can talk about this all day.
I think the most important thing for people to take from this video, if they're watching, is when you see charts like this and you hear about us talking about more or less consistency, lack of volatility in the market, and one of the main questions we get is right now a good time to buy? And in my opinion, without trying to make a sale, I think it absolutely is, because the floor has happened and the ceiling has happened. We're somewhere in the middle now. So if you are looking to buy something, you're looking to trade for something, I can't imagine a better time than now. Because look, prices have almost gone down. If you take this chart and you take all these top pieces, almost 50% across the board, if not more, right? So if you look at the peak of this chart was in 2022 February to now, you'll see a huge dip in prices.
Well, we can go back to one of the charts. We can actually see it from there.
It went like this, and you're going to see this, and then you're going to. When you see this, that's buy time, right? When you see this, it's sell time. Or so I've heard on.
So you
MSNBC,
you buy low and sell high.
Yeah, which listen, that's
give me five prime examples of things that we sold at a price 6 months ago versus today.
When you ask people, like, well, what's a more popular model, Panda Daytona or a Pepsi, right? They're pretty equal, although Daytona historically has even more of a premium, has the biggest premiums. It's the most popular watch. But there was a time in the beginning of the year when Rolex actually cut allocation of Pepsis to their ADs, right? So we saw a spike back to some really, really high numbers of 24, even 25,000 for a brand new Pepsi Jubilee. Now
there was also the rumor of them getting discontinued.
No, there was just a legitimate shortage of new supply of that model, hence bringing the price up. So is that a demand thing or is that a supply thing? Now, Panda is a very funny one because I've seen Pandas drop significantly in price, the 116500, previous generation over the past 6 months. And why is that? Why do you think that is?
Why did it drop?
Yeah, why do you think it dropped?
Because people want the new stuff.
So it does have to do with the new model. So when the new models came out, the 126500 reference, they were obviously very high, and the more of them that come on the market naturally drives the price of the other one down even more.
Of course.
All right? So that's what that happened. But that's a very unique situation because we don't have a new Pepsi. We don't have anything new like that. So I've seen Pandas come down quite a bit because of its older brother, I would say, or younger brother.
Younger.
He was younger. Went to 6,500, kind of drove the price
Panda's
down
a
a little
she
bit.
to me for some reason.
Huh?
I don't know. It's a she to me.
She? What?
Yeah, I don't know. It's
Panda?
just like I think of a Rolex Panda Daytona. I think of her as a she, not a he.
Panda?
Yeah.
You think Panda's a feminine thing?
I
They're
don't
cute
know.
and cuddly, but I
Whatever.
think it's a perfect name. I heard some of these people come out with the craziest names. Hey, did you get the Bruce Wayne one? Right? When I first heard that, it's the new Steel GMT.
Right. Why is
Who came up with that name?
I wouldn't be there. The flies are flying on the wall. When people come up with those names like the Starbucks and the Smurfs and all that.
Somebody told me something about the gold GMT the other day, and he was trying to explain it to me, and he used a term, and I couldn't understand what he was saying because I was like, dude, I'm in this business, and we throw all these terms around amongst dealers. I was like, I never heard that. What the hell did he say? I can't remember. It was something like way off brand. But anyway,
I'm gonna throw this out to you, and that is, as far as year-to-date pricing is concerned, I am seeing a slow increase, a very slow increase on a secondary. Whenever you're out there, you need something, let there be the other day we were looking for a particular lady's Patek, right? And we knew that that's a Patek that's in that $70,000 price range. And the minute you saw a few other dealers looking for the same watch, all of a sudden we're getting quoted 80. Right? So it's also very situational in the market, especially on the secondary when you're sourcing. When you're selling, it's more or less even. So what that does is it messes with your margins, obviously.
I would like to point one thing out, is if you look at all the bubbled markets that happened during, let's say, the COVID times, luxury watches, cars, handbags, real estate, you name it, right?
Well, real estate didn't suffer.
I'm just saying assets people were putting money into that were more or less liquid, right? I still, in my opinion, think that watches are the best. And I'm not talking about from an investment standpoint. I'm talking about from overall demand and the willingness of people to pay these premiums. I just got off the phone with a guy who has a great relationship with Rolex and Patek and Rolex and Audemars Piguet. He bought from us the Aquanaut White Gold, the travel time, right? And what he said was, I never buy in the gray market. I watch you guys all the time. I have my relationships with these ADs, but I can't get this Patek Philippe, and I'm willing to pay this premium 2x over list, because at the end of the day, the roadmap that they gave me to get this watch makes it not $145,000 that I'm paying you, but $190,000 that I'm paying you, right? So the demand is still there. People are still willing to pay these crazy premiums, and you still cannot get the product, no matter how you spin it. So in my optics, that makes for a good market.
Outside of Rolex, because that's the obvious, what's selling?
It's not for a lack of demand. It's a price thing. If you got the right product, you got the right price, it will sell. Our leads have not gone down. Our Instagram inquiries have not gone down. People still want the product. They just want it at the right price.
Common trades?
Common trades? You mean everything's a trade?
Well, one of the things that I guess we should say is
pretty sure if I throw G-Shock up on Instagram, somebody's going to want to sell, trade a Timex and a Nixon for it, without a doubt.
But what are some of the what do you see people trading in? Let's go in the higher end stuff, 100,000 plus. What do you see people trading in to get that $100,000 watch?
Yeah, people here, case in point, the trade that's coming in is going to be for a yellow gold day date. So, because they've seen more or less stability in higher end product like AP perpetuals or ceramic pieces or Patek Philippe, Autolists, they're trading in their precious metal Rolexes or stainless steel APs, and they're trading up.
I feel like that there's still because there's still plenty. I mean, like I said, the market prices went down and stabilized, but you still have a boatload of models out there trading at an X value of their retail prices. There's still plenty of people out there that got in on the low. They didn't get out on the very highest market, but they still have the ability to get out and take a profit on certain watches. So I see them again putting them back into more expensive pieces that have stabilized that may not necessarily be trading at an X value of MSRP.
I think what are real buys right now, I think that people should really focus in on is if you are pre-owned buyers out there, because some people, they want to be original only, they want to unworn, brand new, but there are people out there that, want to get a better deal. They're okay with pre-owned. Precious metal Rolex. I mean, you got root beers, 10, 15, 20%, even upwards of more, depending on condition, under retail. Fantastic watch. That was $60,000 at the peak. Buy that pre-owned. Buy the precious metal Daytonas pre-owned. Buy the Oyster Flex Daytonas now. They're really, really fair and very small premium over retail. Like, what's the real downside? Do we think Oyster Flex Daytonas are going to be under retail? I would bet no. So it's a great time to buy this type of product.
Okay, let me switch gear to Richard Mille.
Richard Mille, I would say if I'm a buyer of Richard Mille, I would be looking at something a little bit more rare and discontinued, because what I've seen recently from the brand is when they put models out, they start out real high just like anything else does, and the more it hit the market, the more the price gets driven down. But buy pre-owned Richard Mille, buy models like 1103s that are discontinued, certain 3501, 3502s.
I mean, let's go back 002, 003, 004s.
Well, that's
the classics.
That's obviously a much different conversation, because you got to be careful of whom you're purchasing it from. If the watch has been serviced, you really need to, on that one, you really need to buy the dealer. Yeah. 2s, 3s, 4s. We just got a 4 in, right, which is fantastic because we know how much of a complication that is. But
we bought that already with CPO papers, fully serviced.
It's fully serviced, it's good as new.
And that's another one that creates a big gap when we're out there buying. If I'm buying a 004 and I want to pay $10 for the watch, if it's serviced and if it's already come back from Richard Mille, I'll pay $12 for it.
It's a 20 grand service in like 8 months.
Exactly.
You know what I mean?
So
it's like
there's a big gap there as well. So careful when you're buying those things. I think more or less the purpose of this entire video and the reason why we showed you other watch indexes, and as much as we may not believe into them 100%, there is some truth to them in a sense that it is still numbers and statistics don't lie. I've always said that, right? Regardless of how they calculate those graphs, the graphs are basically confirming what we already said, and we said this
I think it's pretty,
a couple of months ago.
I think it's pretty accurate.
It's pretty accurate in regards to what we were saying. We are seeing, what did you say? It was in this, right?
Yeah, I mean,
and so here we are. We are here. You're going to see. I don't know how long it's going to last. I don't. Again, elections.
It's like a ski slope. You go to Aspen, you take the gondola all the way up. There you're at the top of the mountain. Then you ski down the mountain. By the way, that's the market dipping.
Well,
and now you're chilling at the lodge, having a few drinks and having a wonderful lunch. And that's just kind of where we're at. Right?
Chilling, having a wonderful lunch.
That makes sense.
It definitely makes sense. I'm going to ask you one last question before we get out of here, because some of the indicators are now starting to show that inching up. And I've always said, the watch market is one of those markets. It's not a steady rise. It's like when it goes up, it shoots through the roof. When it goes down, it shoots down to the bottom. Do you think that's an indicator for things to come? What do you see? If I looked at those charts 6 months from now, what's your prediction?
I mean, I certainly think there's potential, but for me, it's not. The most important thing when it comes to our market, along with other markets, is supply. Supply is a very, very important concept in our business, right? If there's a constrained supply of something, the price is going to go up,
and they shoot up right away.
There's certainly opportunities.
Something gets discontinued, something gets this. Those things will obviously get lost in the sea of the multitude of models and brands and et cetera that's out there. But again, I've always said this, because again, the question is now the right time to buy? And you said it is. But in my mind, I always say this: look, you may have been looking at a particular watch at the peak that was trading at $100,000. And if the answer to yourself at that time, well, you know what? I'm priced out. This is not a watch I'm willing to spend $100,000 on. I feel like it's either too expensive or it's just too expensive for me. Mm-hmm. And now you see something that you have wanted. At the end of the day, that's now down to $60,000 or $70,000, and you can play in that price range in your head. You can agree with yourself to say, okay, I'm okay playing in that price range and paying that price for that particular watch, and that's what you do, because at the end of the day, I've said it for 20 plus years, these watches are not investments. They are expensive toys. You just buy them wisely at the means that you can afford.
Assuming you can afford, if you're trying to time the market, don't. Just buy the product.
You know how difficult it is for us to time the market? And let's tell them the truth. So when 2 years ago, the market, should hit the fan kind of like August on the secondary, September on the primary, people started to realize the prices are coming down. You came into my office in May saying, listen, Roman, I think we need to start being extremely careful. We start selling out of Daytonas that we had in stock that cost us $50,000, 6, 7 pieces, right? Certain Royal Oaks, certain things of that nature, right? And we thought we were prepared. We were cash heavy. What we didn't account for in the 2 years to come was the fact that, we needed to be more liquid due to the fact that now sales went from buy. Nobody was trading anything in the hot market. Now in the slower market, people want to trade stuff up, trade stuff in, take something, because look, what happens when any market is hot? And I don't care if it's socks, watches, jewelry, it doesn't matter what it is. A tremendous amount of goods are being bought up, which means now you have the consumer market that is full. They
Yep.
just had a humongous full
sure.
meal. And it takes a while for them to get hungry again. And besides appetite, you also have to be in the mood, right? And when you start seeing prices coming down, that's why it took us so long to stabilize, if you think about it. But now there's nobody out there anymore telling me, oh my God, this used to be this. This is an indicator to me. For the first year, this used to be this, now it's this. Now it used to be that. And we talked about it all the time. Now that's not a part of the conversation. It's just this now.
Yeah.
And it's just a question of whether you want to buy. And because it's a buyer's market, both for us as dealers and you as a consumer, you're able to get out there, take your time, not worry about 7 other guys standing behind you.
Consumers have recovered. Dealers, for the most part, have recovered. So now we're just kind of in a very, very flat situation right now, where it's a product thing, it's a price thing. If you're able to afford the product, like I said, make sure you buy the product. That's all I'm going to say about that.
With that said, Adrian, thank you so much for joining me, guys. Thank you for joining us. As always, like, comment, share, subscribe, do all those wonderful things that help this channel grow. We'll see you next week.